We'd say we're in a range here between 800 and 1,000, so I'm probably not that far off from where you are, maybe just a little positive, more modestly positive. I don't think we're waiting a year to get out of this recession. I'll explain that in a minute, but I think we're in a range, 800 to 1,000. I think we're in a bottoming process, and I think retail investors absolutely ought to be averaging back to their neutral points. I think most retail investors are underweight equities now because of the huge hits they've taken. It's a very difficult time to do it, but they should at least be averaging back to their neutral points. Now, if they don't have a neutral point, they ought to get one by sitting down with a financial advisor, but they want to get down to that level and use this opportunity to get into the market. I mean, I like to give people the example of the 1930s, which was the worst series of bear markets in our history. The market was down 60% from the peak in October 29 to 10 years later. That said, if you had averaged into those markets over those 10 years, which I know would have been very difficult to do because the news flow was awful, you would have been up 60% over that period. So the power of dollar cost averaging is very good. You don't need to be an expert. You don't need to call bottom. That's what I'd be advising people to do. In terms of the tactically, we're actually overweight equities. We've been overweight since just below 740, not on the way down, but on the way back up from 666. We think this rally probably has more to run. Could go through that in some of the discussion. I would also highlight one other thing that I think is interesting. There have been 3 lows in this bear market. The first occurred on October 10th. That was actually the high volume low. It was also the low where we had the largest percentage of stocks hitting new lows. So for me, it was the actual low, and that was at 840, where we are right now. That low was discounting an Armageddon scenario. The November 20th low, we hit a new low with less volume. That was down at 750, or somewhere in that range. That was kind of discounting, I would say, a long, deep recession. If you recall what happened in that time period, we went from saving the financial system to now worrying about the economy completely collapsing. The last low occurred on March 6th at 666 on the S&P, a few days later perhaps on the Dow. I would argue, and be interested in what you guys think, but that was the low volume low and the most narrow. It was actually hit mostly the financial stocks that brought the market down to that level, which is encouraging for people with an optimistic point of view. I would argue that that low was sort of discounting the end of capitalism almost. I mean, it was really at that point that you had a series of pronouncements coming out of the administration that suggested they were just going to undo this whole system. And it was right around then that you had a reversal. If you recall, the AIG bonus issue, to me, was a huge sort of Rubicon event, because the Congress passed that legislation which basically abrogated contracts that the U.S. government had made with private individuals. I mean, if that had gone through, that's the end of capitalism. You don't really have a system at that point.